Hello, this is a memory tool for your helping to memorize the property and casualty standardized policy structure. So you can see that I set up a mnemonic and don't cry if your dragons eat elephant ankles. Well, I drew this using my mouse, so I thought it's not bad. The crying dude or person here with this watching this dragon ready to eat the ankle of an elephant. Maybe needs to be a bigger dragon there, or it's going to get squashed. But anyhow, so we have the parts of the policy. We have the declaration. That's the D. The C is the condition. The I is the insurance agreement, and then the D for definition, endorsement, exclusion, and then additional coverage. So quickly now, the definition here, declaration page. It's like a table of contents, has almost all the information that is required, and it binds the rest of the parts together. And the insuring agreement, well, actually I have the condition come first. So the conditions are really how the insurer and the insured responsibility are to each other. So it covers the period and the territory, what happens if one lies to the other. Liberalization, that's if there's an improvement that the insurer gives an improved benefit without cost, and that would be applied to your policy as well as anybody else's. And how to cancel non-renewal. The insurer may elect to non-renew policy by giving the named insured 45 days written notice, and it has to be with good cause. Subrogation, this is just when you suffered a loss, you allow the insurance company to step in and sue on your behalf, or take over your position, so that one, you don't collect twice, and two, they can try to cover their losses. 7, the duties and event of a loss. What are you supposed to do? And finally, 8 is the method that was used to give value to the items that were lost, or the liability. So sure, none of this is a complete list. It's just sort of the basics. Definition is kind of the self-describing term. However, if it's defined, then that would stand in court over some terms that have been undefined, in which case, if that were the case, normally a judge would find in favor of the insured. So then you have exclusions, that's clear, but typically you have earth movement and flood that aren't covered. Basically, it's a method of cherry picking. The government has to pick up whatever is not profitable. War, wear and tear, that's a strange combination there, war and wear and tear. Insects and vermin, inherit vice. That's if something was in the structure that was already there previous to the insuring it. It might have already been eaten out and weakened, let's say by some termite or something of that nature. And then a neglect of the insured to protect the property in a reasonable manner. And finally, fungus and germs and such. Like I said, there's more. But anyway, the basic standard structure is going to be don't cry if dragons eat elephant ankles. Okay, thanks.